Good morning. It's Thursday, August 17th, and went hiking yesterday. It was a hiking day. It was gorgeous here in Atlanta. 80-something degrees, low humidity. It was good. So went to Kennesaw Mountain. Anybody in the Atlanta area, Kennesaw Mountain is one of my personal favorites because it's close by. It's about 20 minutes from me. Get a good 1,000 feet in elevation within anywhere from a 3-mile to a 7-mile hike yesterday. I think we did 5. But let's talk about where the market is. We'll go into Cisco. We'll go into Walmart. We'll go into its Apple dividend day. I'll do a bunch of single stock ETFs. But where's the market? It is now 9:35. I'm doing this a little bit later. I stayed on and goofed around on Facebook Live a little bit. But here's SPY. You got no confirmation. On the 4-hour algorithm right now, there's no confirmation. It could be continuing to lose. You've got your RSI's at 35. It dipped up a little bit, and it's dipping up this morning. Right now, the NASDAQ is up 0.24. The Dow Jones is up 0.26, and the S&P is up to 0.27. Like I said yesterday, it's not panic. If we saw panic and we saw a bunch of things down, the VIX would be up. The VIX is actually down 1%. It's at 16.16. The grade 8 are up today. You're seeing a little bit of a bounce back. So we'll talk about a little bit of what to do with that. But what I want to point out to you, and I'll put this in the newsletter. I noticed yesterday, I said, I remember August being because I looked at my year-over-year gains in my portfolio. And I said, August was a really good month last year because, last year I was up in my portfolio and I remember I ended the year down. Well, if you remember last year, it was October lows. August rebounded almost 50% to where we saw in January. It was almost a 50% retracement on SPY. And then at the 50-day, it just got rejected. And that's where we put in the October lows. That was a 20% retracement from the August high to the October lows. If that's what we're doing this year, but we're doing it with July highs down to, say, October, you're not going to time the market. So you don't know if it's October. You don't know if it's September. You don't know what catalysts are coming in. But if we were to pull back on that, you're at about 377, 370 on the SPY, which would be a huge move down. You'd lose the 50-day. You'd lose the 200-day. Right now on the weekly, you're just losing the 9-day. So you haven't gone past the 21-day. The Bollinger Bands are still wide open. They're not closing down yet. That top is still up there. It will come down. All your volume will have been gone. And this volume line is from September 2020. August 2020. So this goes back 3 years, just after COVID happened and we had that great run up. So you're seeing the volume level. Where are people holding SPY? Well, they're holding it up right just below it at about 428. And then there's a good volume at about 410. And then there's a good volume just under that. So you've got to make your way through all of these little support levels in order to say, yes, we're going to go down 20%. And I just don't see it happening. I just don't see it happening. Right here on the 4-hour, we can look at a daily, but I'm used to looking at the 4-hour. We've broken the 50-day. We've broken the 21. We've broken the 9. The next one we have is the 200, and that's at 427. Is that realistic? I think that could be where we're going. And I'll talk a little bit about some of the things that I see, but I think that could be where we're going. I don't think we're done. The MACD is down minus 1.7. The last time it was down here, we were at 395, and that was back in March on SPY. We've just run up a little too much, a little too fast, and we're pulling back. But a pullback is healthy. And it's a delayed pullback. It's a longer pullback than I think most people expected. but it is a pullback, and it's just one you're going to have to live with if you want to be in the market. Now, there's ways to play that. We'll talk a little bit about it. But let's get to a couple of the earnings movers from today. First one is Walmart. Your boy owns Walmart. It's a long-term holding of mine. Walmart topped earnings, and they raised. Essentially, the entire earnings was driven by grocery and e-commerce. It was up almost just above 160 in pre-market. It's at 160 right now. It's definitely lost some steam. I mean, this was up 2-3%. It's up 0.79 right now. So when you beat and raise, even though you're at close to highs, I mean, the high is really about 162, 163. You beat and raise and you're at the highs and you pull back. That's not a great sign of a super, super strong market. Cisco yesterday announced earnings after the bell, and my notes are pretty clear. Cisco beat, and they didn't raise guidance, but they were very conservative with their guidance. And so if you look at Cisco pre their earnings and just look at the after hours, and we can go over to Active Trader Pro. I can show you Cisco. Here's the after hours, and you can see the initial reaction was down, and that's because they gave guidance. It wasn't like great, but what happened was when they got on the call, they said, yeah, we're being a little bit conservative. We see some things in the market that give us a little bit of a conservative thing. Now, here's the thing. If we go back over to FinViz and we look at Cisco, it is the cheapest mega cap tech stock. And even though it's on a run, if they are sandbagging and they are being a little bit conservative with their guidance, this could be easily a $60 stock by the end of the year. Easily a $60 stock by the end of the year. If next quarter they continue to deliver the results that like they did this time, people will start piling into this one. Now, there are a lot of sales. There's no buys on the insiders, and they're selling all around 48 to 50. And currently, this is trading at 55, so it's a little bit expensive. I would wait to buy this one. If you are looking to get into mega cap tech and Cisco is the one that you want, I think it's a great company. I do think that they provide a lot of the infrastructure for the internet. And they will continue to provide that infrastructure for the internet. I don't think this is a bad one at all. I don't personally own it. I own it in some ETFs, but I'm not buying it. If it pulls back to about probably this VWAP line right here, well, not the VWAP line, but it's a support line at about 52. If it pulls back there in the next probably 5-6 weeks, I'll probably put an alert on this. If it pulls back there, I might buy it and just hold it for a long term. So I think that's a good one. Blue Cross Blue Shield, I guess, of California. I don't know. You can look it up. They announced that they're going with the Mark Cuban drug and Amazon for their pharmacies. That's huge. Remember CVS and Walgreens and all of these middle pharmacy middle managers. That's what Amazon and Mark Cuban are cutting out. So now an insurance company goes with that low cost deal. Well, what does that do for the other insurance companies, managed insurance companies? Well, UNH is going down. They make a ton of money off of their central pharmacy. Well, if they make a ton of money and Mark Cuban and Amazon are cutting that profit out, you could see that hurt their bottom line. So there is a gap here down between 460 and 451. I don't expect that one to get hit again. My guess is that 489 is probably your support level. I continue to say anything under 500 is a decent buy on this one. Anything over 500, you can feel free to sell whenever you want. I just don't, until the Inflation Reduction Act is actually negotiated, I just think this one kind of flounders a little bit, and I think it's going to be negotiated sometime next year. Let's talk about Apple because today was Apple's dividend day. And Apple is kind of flat. It's down 0.01. It's at 176. Should you buy into this one? If you don't have a position in this, Apple is probably decent here at 176. I do think, you've broken through the 200-day. We had a buy yesterday at 177. Hasn't gotten you out. The MACD is still crossing up. It's oversold. I don't think that Apple at 177 is a horrible buy. I think if you continue down and the market continues down and we see SPY continue to go, Apple is going to have to be brought down with that. Apple dividend day, I got a couple $1,000. Start your position though. If you don't have a position in this, start it. I can't tell you that this is going to be $200 by the end of the year. iPhone 15 is coming out. I'm hearing good things. If China starts to really incentivize their economy and all of a sudden people start buying the iPhone, boom, the iPhone's being made in India. So they're going to start making cheaper phones in India. I think that's a good one. But Apple is one of those where we've seen it move from about 196, 197 down to 177. And I don't think that you see this one move down like this very often. You can look at a weekly on Apple, and it's just, it barely even nudges with that record. I don't think you've broken you've broken the 9-day. You're kind of touching the 21-day. Haven't broken the 50-day. Haven't broken the 200-day. So the 50-day, if you get down to that 50-day, you can clearly see that 50-day is at 158. That's why I'm saying, even if you say you buy this at 176 and then it gets down to 158, so you buy more. Just don't blow your entire load on one lot. Buy it in bunch. Spread it out over a few weeks. I don't think that we're done going down, and I think Apple will get brought down with it. But I'm not selling out of my position because I don't know where the market's going. It just feels like it's going to go down because we've run up so much. Let's talk about single stock ETFs. And there's 3 links that I'm going to include in the newsletter. There's this one from Granite Shares, which you can see Tesla, AAPB, which is a 1.75 Apple daily. It's long. When you see long, it means if it goes up, it's levered by 1.25 for Tesla. It's levered by 1.75 for Apple. It's levered by 1.5 for Coinbase. It's levered 1.5 for NVIDIA. So when you see it, that means up. This one's Granite Shares. And then we have AXS, which is a smaller one too. They have Tesla, NVIDIA, and PayPal. Tesla is just a bear. So TSLQ, if you think Tesla is going to go down, TSLQ is the one to buy. NVIDIA, this is a 1.25 bear. So if you think NVIDIA is going to go down, you can buy that one. NVDS. PayPal, if you think PayPal is going to continue to just go down, PYPT. This one's levered by 1.5. I'm sorry, that's a bull. That's going up. So it's 1.5 going up. Now the granddaddy of them all, Direxon. And you can look at, Direxon has single stock ETFs. They have Bull, they have Bear. MSFD is Microsoft. We can talk about that one. We can talk about Google, Bear, one-time shares, Bull, Bear on Amazon, Tesla, TSLS is the Bear, TSLL is the Bull. And you can look at those. They also have fixed income, 3 times levered against the TLT. The 20-year, the 7-year bond. You can look at international. You can look at market cap. I'll include this link to all of these stocks, and you can trade them just like you normally would. So let's take a look at some of these because I do think that some of these are really good. FBL, which is the Granite Shares 1.5 levered against Facebook or Meta, whatever you want to call it. Now, these aren't long existing stocks, so you don't have a ton of charts around these. They're not heavily traded, so you might have some problems actually buying and selling them, filling your orders. So just be aware of that. But Meta right now is trading at $295. This one is a 1.5 levered ETF. Right now, you're out on that one. I don't think I'd buy it, but I like Meta going to 360 this year. And this one, I think if you can get it, probably in the 80s. Right now, it's trading at 93. I think if you can get this in the 80s, I don't think that's a bad thing because I don't think Facebook is pulling back down to 250. So I like that one. AAPB, which is a Apple. It's an Apple. Come on. It's an Apple 1.75. I think that Apple's going back to 200, but like I said, it could pull back. So I would wait for confirmation. If you're trading AAPB, it is a 1.75, so it's almost 2 times levered on a single stock. It's lost the 200-day, but it doesn't spend a hell of a lot of time under that 200-day here. And remember, this is levered to Apple. So this is 100% just levered to Apple. You're not buying into Apple. This is a trading tool. This isn't, hey, I'm going to invest in this because the fees will eat you up. The only reason this has run from 20 to 30 here is because Apple ran so much. This is a trading tool. You don't want to hold on to this one. NVIDIA, NVDL, which you'll see in there. I think NVIDIA is going back to 500 on earnings. Now, if you don't want to buy NVIDIA and you don't want to invest long-term in NVIDIA, which I think is effing crazy, I think you should buy NVIDIA. But if you just want to trade it, this is a 1.5 levered times ETF on NVIDIA. 89.16 was the buy. It's trading right now at 87.26. Remember, volume will drive this one particularly. You're going to have some problems filling orders in some brokerage accounts because the volume's just not huge, but trade it as you will. BABA. We talked about BABA under 100. BABX is one that you could trade. This is let's see, it's come on, TrendSpider. 1.75 on BABA. The volatility on this one is huge, absolutely huge. BABA right now is trading just under, I think, 90. But this one's at 22. Algorithm doesn't have you in. Tesla, TSLQ is one that you may want to look at. This one is the bear. I don't think Tesla's done going down. Let's see where Tesla is. Tesla is trading right now at 222. I think you get to 200. I think this one, look at that one. TSLQ, $31 and you're at 37. It's oversold. It's up here, overbought. The RSI's at 80. The MACD's kind of just up there. It's just hanging out. But these are great tools for you to have. And I think you can trade them. All of these will be in the newsletter. And if you haven't signed up for the newsletter, dailystockpick.substack.com. It's free. I send this out every day. The weekend has some paid educational emails, but the daily one is completely free. dailystockpick.substack.com. If you ever want any of the links to my show, it is linktr.ee, Linktree/dailystockpick. So sign up for the newsletter, go to the Linktree, get on the Facebook group. It's a private Facebook group, so you don't have to worry about being spammed. Twitter, I have Twitter. I have Instagram. In fact, I've got a great Twitter. If you did not see this one, I posted this one yesterday. Finally, a great TED Talk. This is a great video. It's 40 seconds long. Go to my Twitter, and it's posted right on my profile. Let's see. Let me make sure that the sound's not on because I'll get dinged. Right here. You people don't hustle hard enough. Your cold plunges are causing shrinkage, and your avocado toast at 5 a.m. is making you soft. Yeah, watch this dude. He's funny. Funny as F. I loved it. I absolutely loved it. So Linktree and thing. Let's talk about DraftKings. I traded DraftKings. I haven't sold DraftKings. I am still holding DraftKings. I think DraftKings gets up to 30. I just think we're heading into football season. If you haven't watched Hard Knocks and the Jets, I still have to watch this week's episodes, no spoilers, but there's a mentalist on there and he does amazing things. And I think he's a regular on Hard Knocks. This one's at 27.38. Now, I think that 200-day is going to provide some support at 25. I'll add more. I'll just add more. I think DraftKings, here's what I like. DraftKings is one that will, going into football season, you'll start to see this one start to spike because people will start betting. They've turned it around. I think it's going back to its IPO price, and we can go back to the, it's expensive, no doubt about it. It is expensive. But understand, it's just made its 50% retracement right there. And that's all it's done. There's its 200-day on a weekly, and you can see it broke through it. Now it pulled back. But I think it's a $40 stock because you can see it was up here at 55. Just 2 years ago, it was up here. And they were basically spending $1,500 per sub to get a subscriber way back here. And you know what? They're spending much less and making money now. So you have football season coming up. I like this one. If you think we are still going down and the growth names will get continued to get dinged, remember SARK. This is a short of the ARKK. And ARKK is Cathie Wood's ARK fund. It has historically, over the last 5 years, just been a phenomenal fund. It has taken it on the chin ever since she became the largest fund. And I think there were $2 billion a day being put in and taken out of her fund last year. I had a nice little fireside chat with her a few weeks ago, maybe a month ago. I think it was back in June, with about 20 people. It was great. And she's just she's super, super smart. I don't bet against her. I also am not invested in her. But look at this one. From 33 on August 2nd to 38, 20% move. 20% move. Great move right there. CHK. I saw CHK yesterday. This is Chesapeake Utilities. I think it's what it's called. Let's see. Chesapeake. I know it's Chesapeake. But it's Chesapeake Energy Corporation. Made a big move yesterday. Paid out its dividend. Yesterday, it went all the way down to, looks like 82. It's trading at 87 now. I don't know what pushed that one up, but finally, it's a stock that's kind of, moved up there. We talked about Duke Energy. We talked about some other utilities. I forget Southern Company, which is Georgia Power. And these utilities have just gotten killed. Well, utilities was up yesterday. So I don't know if utilities have turned around. You can see Duke Energy hasn't really turned around after their earnings. They kind of pumped up there, but that 200-day is providing pretty significant resistance. You can see it bouncing right there. You can see it bouncing up over it and then just losing it. And you can see it just using it right there as resistance. But I wrote down CHK because they did have a move yesterday. Let's talk about natural gas. Excuse me. Boyle, I think under 70. Joe said he's in under 50, at about 50, in the 50s. This is at 67. Bless you right now, 67. I think it's 70. It's up 2% today. I think anything under 70, I think you could buy this. Remember, natural gas is the only energy that has not participated in the energy move. This one has not moved significantly up, and we're heading into winter. So I like that one. SPGC. This one's interesting. After soaring 600% from its IPO price at $4, let's see what this is trading at. It's giving most of it back on its second day. It fell 85% yesterday. It was briefly the 2023 best IPO. I'm going to go to a 5-minute chart so we can see what it's currently doing. But it fell 85% yesterday. Take a look at that. This is exactly what hype will do. Got up to 23.67 yesterday. This is yesterday. It traded at 23. Today it's at 4. Yeah. This is what rug pulls are all about. 100% what rug pulls are all about. SPGC, you can take a look at it. VFS, This is the Vietnamese electric vehicle startup, VinFast. It soared on its SPAC deal. It's a SPAC that debuted yesterday. We're going to go to a 5-minute for this one as well because 4 hours only going to get you a couple of candles. It'll have it because it's a SPAC. It'll have a longer candle, but we're just going to go to a 5-minute because all we care about really is yesterday because that's when it started trading. Shares were down 20%, though at its peak, the company was valued greater than Ford and GM. Today, you're up down 15%. This is what rug pulls look like. This is what happens with hype. You can see it gapped up right there. It gapped all the way up to 36 and then gapped down to 31. And today it's at 26. So VFS. Coinbase. We talked about Coinbase yesterday, and I want to reiterate this. Coinbase popped 5% yesterday before fading into the red. It basically took it down. It takes on Binance as the largest market in digital assets. The exchange received approval to offer U.S. crypto futures trading from the National Futures Association and Commodity Futures Trading Commission. That's a pretty big deal, but it wasn't a big enough deal to get confirmation above that 9-day. So you're still out in the algorithm. I don't think that you trade this one at all until you get confirmation back. This one is going to pop to probably back to 90 at some point in time. So are you upset if you buy at 77? No. You're going to pop back up to 90. It's going to go back to 100. You can hold on to this for quite a while. Let's talk about social requests. Brandon asked about Hibbs, and he made some great points. Hibbs may be a great idea right now. This is the short of the S&P 500. 4-hour algo has you in since August 1st and still in. The 65-minute has you in as well. And by the way, he says this completely unsolicited. If you don't have TrendSpider, what are you waiting for? I sell TrendSpider. If you go to Linktree or you look down below, there's a link. You can save 25% with the code DSP25. I give you my algorithm. I give you my scanners. I give you my my watch list. I give you everything that you need to be me on this thing. But you can see Hibbs. This is a 3 times levered short on the S&P. So when the S&P goes down, this goes up. You've still got confirmation. And this is what he was talking about. You're still in on August 1st. The 4-hour at 319. It's at $4.08. I think that 200-day, like we talked about, that 200-day probably provides some resistance. I don't think this one is going to reverse split 1 for 10. Remember, these are 3 times levered ETFs. So what happens is, in order to keep their listing, they reverse split. They are decaying assets. These aren't investments. You don't want to hold on to this. But Hibbs is a buy on the 65-minute algo too. Let's look at the 65. I mean, the 65 minutes should have you in. I don't think any rally is actually sustained. Like right now, the Nasdaq is down. The Dow is down, coming back down. And the S&P is coming back down. You're just not having sustained rallies. Look at that. 65-minute got you in here at $3.88. And you're at $4.08. I think $4 isn't a bad price for Hibbs. I may buy some today. So Brandon, kudos on that one. I like his plan. Sam from Facebook, he says, hey, can you take a look at GGE? Let's look at GGE. This is Green Giant. And no, I found out from looking at it a little bit earlier, it is not the vegetable company. This is a real estate company. My guess is Sam is asking about this because of the social hype with that one green candle yesterday. And you went up 100% in the morning on that candle. Let's take it. Right now, it's a falling knife. I mean, take a look at a long term of Green Giant, a weekly. You can see it's just kind of, it's got it's pretty wide range. You're under your 200-day. You've got a huge red candle that is currently this week. It is, its low is 80 cents. Its high is $1.83. So it's got a period of 138%. That's crazy. That's crazy. I don't know anybody who would want to trade this one because if we go and we look at GGE in the in FinViz, you're going to see Green Giant is losing $111 million. Their market cap is only $78 million. They have no cash. No cash. Short interest, they're probably looking at a fairly short interest. There's no news on it. There's no insider sales. There's nothing. So Sam, I'd stay away from. I think this one's just hype. And I think that green candle that we saw on that 4-hour morning from yesterday, I think that's where you're asking me about. And I think it's just hype. I think in my mind, it's just 100% hype. Stay away from it. I don't even think it's worth trading, to be honest with you, because at $1.03, I think you come back down to the 80 cents. Let's talk about scans. Cleveland Cliffs. This one has a cross up. It is up 0.26%. We talked about Cleveland Cliffs coming close with a cross up yesterday, and my dog is barking. Well, actually, it's got you out. So Cleveland Cliffs got you in, got you out on this candle right down here, down 4%. Doesn't have you in. I talked about Boyle. I like Boyle under 70. Well, you know what doesn't like Boyle under 70? It's inverse ETF, which is KOLD. Cold. By the way, Boyle, think hot. KOLD is cold. So that's why they named it like that. But KOLD on it's got you in at 52. I just don't think that if you're looking at Boyle, you're looking to trade it today. KOLD is down. Boyle is up. I think Boyle under 70 isn't a bad buy. UVIXI. Now, the VIX we talked about, it's at 16. UVIXI and XVIXI has been broken. And the VIX, in my mind, is broken. You don't have a huge amount of volatility in this. And if we were doing a panic sale and people were panicking, that VIX would be up. UVIXI gets a cross up here at 1855. It's been a loser. Just understand it's been a loser. Doesn't mean it has to come back to the 200-day. Remember, this is a decaying asset, so it could go down. The RSI is not super low. It's at 54.44. The VIX right now is at 1684. It's up 0.36%. This one's up a little bit at 1845, but the cross up happened at 1855. Datadog has a cross up. D-Dog. This is a Chinese. No, I'm sorry. It's not a Chinese company. Is it a Chinese company? It might be a Chinese company. I don't know about it. Let's look. Let's go into FinViz and look. I know they're a database company, but I just don't know if they're Chinese. Let's say, operates North America. Nope. They're here in New York, headquartered in New York. So Datadog, it's a database company. They are not making money, so be fairly careful with this one. They are not making money. But we had that earnings gap, and we had that earnings gap go all the way down to 88. Use that 200-day as support level. It's going to go back up there. The problem is right now, if we pull this back to the last earnings, and we look at some of this volume level, the volume level that you're sitting at is the volume shelf. So the volume level's up here because you have this gap right here. Nobody really bought in this area. You could get to 98, which would be a great move. But Datadog, I think it comes back to fill that gap. So I like that one. We talk about gaps all the time. The problem is this is going to have to be pulled up by the market. So be careful with that one. But I don't think Datadog at that $90 mark, I don't think you're doing yourself any disfavor. At some point in time over the next year, I think you get back on that one. Pinterest. We talked about Pinterest being a $30 stock. We talked about it down here at 21, filling that earnings gap back up to 26. It did. It ran all the way up to 30. It got to $30.86. I think that's where it's going back to. You're at 26. You got your confirmation. You're oversold. The MACD's crossing up. I like it. Lemonade. This one also is a risky one. It is growth. It is not making money. This is AI loans. So essentially, if you need a short-term loan, and they're not loan sharks, but if you need a short-term loan, they use AI versus the FICO score to try and get you loans. They've had some problems in their past where their AI has screwed up. You can see on their earnings, they lost 97 cents per share. Do I expect that earnings, the earnings gap from $21.99, about $22 down to $21 to be filled? Maybe not. I mean, $14.43 to me, If we look at a long term on this one, again, it has a cross up. You can trade it. I just don't like the long term outlook on this one. That long term just to me says it's a failing company. And I don't know enough about their actual fundamentals to say, hey, it's a good one. Home Depot has a cross up. They actually had really good earnings yesterday. They just warned about the consumer. They raised a little bit, but again, this is just a good company. I don't think that you're going to do yourself any disfavor. This is probably a 320 in an unhealthy market, 340 in a good market. You're buying at highs there. I mean, if you're into Home Depot, great, hold it. If you're not in Home Depot, I don't know that you necessarily get into it here because I don't know that you're getting the pandemic stuff that you had back here. That's all 100%. Hey, people are flipping their houses, and fixing up their houses. You got $100 in that one. EXC is the final one. This is Exelon, I think is what is called Exelon Corporation. I don't know what they do, but I do know that this stock chart shows you that it's under the 200-day and it could get above the 200-day. So this one is an interesting chart because I do think that you have some ability to trade this one. Right here at 39.80. Now, mind you, the last time that it got you in, it got you right out. 39.80. The MACD is crossing down up on the kind of minus 0.38. The last time it was down here, we ran from about 39 all the way up to the 200-day at 41. So you're not quite talking 10%, but every time it's gone under the 200-day, it goes back over the 200-day. Now, I don't know anything about the fundamentals of this company. So do your own research, take your own risk. But I do know every time it's gone under the 200-day, it gets back over the 200-day. So I don't know. The death cross worries me because that death cross, the last time we had that death cross, we kind of, fluttered around. So, yeah. Okay, that's it. Hit me up on the socials. Follow me on Savvy Trader. Savvy Trader is a great place to go if you want to follow me. If you want to see the core portfolio, if you're looking to fill out a portfolio, if you're looking to, hey, I want some good companies with good earnings, with good management, with good products, this is the place to go. Just follow me on Savvy Trader. I took the 37 companies that I like best. Mind you, I am a tech investor. Some ETFs like QCLN has been horrible. This is a clean energy ETF. It has been abysmal, and I own it. I don't trade it. I sit there and I've just gone. I mean, here, I'll show you. Let's do a look at how bad I've managed this one. I believe in clean energy. I'm a big fan. I drive an electric car. I don't have solar panels on my roof because I'm never sure when I'm going to move. But QCLN, from a long-term standpoint, it has been a dog, 100% a dog. And I still own even Sedge. But you take a look at this give back on capital right here. We were up at 87. We're at 45 right now. We're below the 200-day. I don't think it's a bad place to buy, but I can't tell you that it's a great place to buy. It's just bad. But that Savvy Trader, this core portfolio, you got things like PXD. I said, buy that one under 200. Costco at 560. I said, buy that under 500. UNH is back under 500. Buy it again. NVIDIA, I said, buy it under 300. Microsoft, I said, buy it under 300. I think now buy it under 330. Meta, buy it under 300. Boeing, I was screaming, buy this under 200. It's now at 228. Tesla will be at 200. So TSLQ, I think, is the play. PanW got all the way up to 260 at 210. Absolutely buy it. They have earnings today after the bell. The Zscaler, I think it was Zscaler. No, it was Fortinet that brought it down. Fortinet's going to fill that gap back up. If PanW has a good quarter, then you can expect Fortinet to fill that gap. Snowflake, 148. It's $180 stock. Just buy it. Just freaking buy it. It's expensive. Apple, 174. Just buy it. Google, under 130. 100% buy it. Oxy, under 60, buy it. Over 60, just you can sell it. Coke, almost under 60 again. You can buy that one under 60 all day long. Target, anything below 130 is an absolute buy. I think this one's a great long-term buy. Qualcomm, down again at 110. I think you wait for this one at 105. Exxon, 109. Somebody asked me a couple of days ago, hey, is Exxon a buy at 104? Exxon's a buy at 109. There's a $120 stock on, energy is going to continue to rise. Moderna under 100 was a buy. It's 102 right now. I still won't trade that one. I'm still negative about it. With COVID, I've got the Moderna shot in me. I think it's protected me. I like it. But they're just a one-trick pony. Taiwan Semiconductor, under 100, buy it. Shopify at 55, 100%, just buy it. Uber at 44.63, it's up 1.26%, buy it. This is a $50 stock by the end of the year. Roblox, 28.40, I think it goes back up to 30. I think it goes back up to 40. Bank of America, anything under 30, absolutely buy it. Cleveland Cliffs, the CEO, has bought a shit ton of stock at about $15. Just buy it. You've got opportunities in this market. Is it going to go lower? I think so. Should you be adding? Just be patient. Good stocks with, in this portfolio, you could buy any one of these companies that are not at 52 or all-time highs and be sure that these companies will get back there. So XLY of the consumer discretionary, I like that sector. I probably should have the XLK in there. I do have to add Eli Lilly. So LLY is one that's going to go in here. I just haven't figured out one that comes out. I think I'll probably take out Moderna and put LLY in there. Because I just think United Healthcare, I think that's a great, very well managed company. And I think it goes back to $550, $600. So if you have any questions, hit me up. I've talked too much. It's 41 minutes. Have a great day, you guys. I'll talk to you tomorrow, which is Friday. Take care. Bye.